You just inherited $30,000. Your mortgage payment is killing you every month. You call your bank and ask if you can lower your payment without refinancing. The person on the phone pauses. Then they say something you weren't expecting. Yes, actually. Have you heard of a mortgage recast? You haven't. Most people haven't. And that's not an accident. There's a button your mortgage lender can press that drops your monthly payment by hundreds of dollars without changing your interest rate, without a credit check, without an appraisal, and without thousands in closing costs. It costs about $250, it takes 2 weeks, and almost nobody knows it exists. This is the story of the mortgage recast, the legal financial maneuver hiding in plain sight, the one your bank won't bring up unless you ask the right question. And the reason it stays hidden tells you everything you need to know about who actually benefits when you pay your mortgage the normal way. Let's start with what just happened in that phone call. You're sitting at your kitchen table, mortgage statement in front of you, $1,500 a month. You've been paying it for 3 years. You hate it. It's tight. You're making it work, but barely. Then your aunt passes away and leaves you $30,000. You're grateful, but you're also thinking, this could change things. You don't want to blow it. You're not buying a car. You're thinking about your mortgage. You owe $270,000. Your rate is 5%. You've got 27 years left. That $1,500 a month is locked in. Or so you thought. You call your lender. You're expecting them to say you need to refinance. You're expecting fees and paperwork and a new loan. But they don't say that. They say you could do a recast. Here's what that means. A mortgage recast is when you make a large lump sum payment toward your principal, and then your lender recalculates your monthly payment based on your new lower balance, while keeping everything else the same. Same interest rate, same loan term, same maturity date. The only thing that changes is your required monthly payment goes down. You take that $30,000, you send it to your lender. They apply it to your principal. Your balance drops from $270 to $240. Then they run the amortization schedule again. Suddenly, your monthly payment isn't $1,500 anymore. It's $1,320. You just freed up $180 a month for the next 27 years, and it cost you $250 in recast fees. No refinance, no credit pull, no appraisal, no closing costs. It sounds too simple. That's because it is simple, and that's exactly why most people never hear about it. Let's be clear about what a recast is not. It's not refinancing. Refinancing means you're taking out a brand new loan to replace your old one. New rate, new terms, new paperwork, new fees. Refinancing makes sense when rates drop. But if rates went up or stayed the same, refinancing could cost you. A recast doesn't touch your rate. You keep the loan you have. It's not a modification. A loan modification is what happens when you're in trouble. You can't make payments. The bank restructures your loan to help you avoid foreclosure. A recast is not a lifeline. It's an option. You have to be current on your payments. You have to have cash. This is a tool for people who are doing fine but want to optimize. It's not paying extra toward principal. Plenty of people send extra money to their mortgage every month to pay it off early. That's great, but it doesn't lower your required payment. If you lose your job next month, the bank still expects $1,500. A recast actually lowers the required payment. It gives you breathing room. It's not about paying off the loan faster. It's about paying less every month while keeping the same end date. That distinction matters because the financial advice industrial complex loves to tell you to pay off your mortgage early. But a recast does something different. It reduces your monthly obligation without shortening the loan. That's flexibility, and flexibility is worth more than most people realize. Mortgage recasts are perfectly legal. They've existed for decades. They're built into most conventional loans. Fannie Mae allows them. Freddie Mac allows them. But if you go to your bank's website right now and search for recast, you probably won't find anything. If you call customer service and ask about lowering your payment, they'll probably try to sell you a refinance first. The recast option will come up late in the conversation, if at all. Why? Because banks make more money when you refinance. A refinance generates fees, origination fees, underwriting fees, appraisal fees, title fees. A typical refinance costs between $2,000 and $5,000 in closing costs, sometimes more. The bank collects those fees, or they sell your loan to another lender who pays them a premium. Either way, there's money on the table. A recast generates nothing. You pay a flat fee, usually $200 to $500, and that's it. No appraisal, no underwriting, no title company. It's administrative. It's boring. It's not profitable. So when you call your bank and say you want to lower your payment, their incentive is to guide you towards refinancing. They'll run the numbers, they'll show you a slightly lower rate, they'll make it sound like refinancing is the smart move, and maybe it is, but they're not going to volunteer the option that makes them less money. That's not illegal, it's just how the system works. Your lender is not your financial advisor, they're a business, and businesses don't advertise the cheap option when the expensive option is sitting right there. Now let's talk about who can actually do this. Not everyone qualifies for a recast. The rules vary by lender, but there are patterns. First, you need a conventional loan. Most recasts don't work with FHA loans, VA loans, or USDA loans. If your loan is backed by the federal government, you're probably out of luck. Government loans have different servicing rules. Recasts are mainly a conventional loan thing. Second, you need to make a lump sum payment. Most lenders require a minimum. That minimum is usually between $5,000 and $10,000, though some will go lower. You can't recast by just paying an extra $100 a month. You need a chunk of cash. Inheritance, bonus, stock sale, tax refund, settlement, something big enough to move the needle. Third, you usually need to have made a certain number of payments already. Some lenders won't recast in the first year. They want to see you've been paying on time. This isn't a credit check, but it's a behavior check. If you're 3 months into your loan, they're not going to recast it. Fourth, your loan has to be eligible. Some loans explicitly prohibit recasts. Jumbo loans sometimes don't allow them. Portfolio loans held by small banks might not have the option. And if your loan has already been sold or securitized in a weird way, the servicer might say no. You have to ask. And fifth, you have to ask. This is the most important rule. Your lender will not call you, they will not send you a letter, they will not suggest it during your annual escrow review. If you don't know to ask for a recast, it will never happen. That's the game. The option exists, but it's invisible unless you know the word. Let's walk through the math with a real example. You bought a house in 2022, $300,000 loan, 5.5% interest rate, 30-year fixed. Your monthly principal and interest payment is $1,703. You've been paying it for 2 years. Your balance is now $287,000. It's 2025. You get a $15,000 bonus at work. You're thinking about your options. Option 1, do nothing. Keep the $15,000 in savings. Keep paying $1,700 a month for 28 more years. Option 2, throw the $15,000 at your mortgage as a principal payment, but don't recast. Your balance drops to $272, but your required monthly payment stays at $1,703. You'll pay off the loan earlier, maybe 2 years earlier, depending on how the math shakes out, but your monthly obligation doesn't change. Option 3, throw the $15,000 at your mortgage and request a recast. Your balance drops to $272. Your lender recalculates. Your new monthly payment is $1,617. You just reduced your payment by $86 a month. That's $1,032 a year for 28 years, and you still have the same loan term and the same rate. Here's what that actually means. Over the remaining life of the loan, you're paying less every month. You're not saving on total interest the way you would if you paid off the loan early, but you're lowering your fixed costs. If you lose your job, if your income drops, if something breaks, you now owe $86 less every month. That's real flexibility. And if you take that $86 and invest it, or save it, or pay down higher interest debt, you might come out ahead of option 2 anyway. This is the thing people miss. Paying off your mortgage faster sounds responsible, but locking up cash in your house reduces liquidity. A recast keeps your cash flow flexible while still using that lump sum strategically. You're not trying to be debt-free faster, you're trying to build a cushion. There's another scenario where this gets really interesting. Let's say you bought a house in 2021 when rates were 3%. You locked in a great rate. Now it's 2025 and rates are 7%. You get $25,000 from selling some stock. You want to lower your mortgage payment.
If you refinance, you're giving up your 3% rate and taking on a 7% rate. Even if you add the 25 grand to your down payment in the refinance, your payment is going to go up because the rate is so much higher. Refinancing makes no sense. But a recast? You keep your 3% rate. You drop your balance by 25 grand, your payment goes down. You don't touch the rate. This is the exact situation where a recast shines. When interest rates rise, refinancing becomes a terrible option for people who locked in low rates. But life still happens. People still get bonuses. People still inherit money. People still want to lower their payments. A recast is the only tool that works in a high-rate environment if you're already sitting on a low rate. That's not a small thing. Millions of people are locked into mortgages from 2020 and 2021 with rates under 4%. Those people are never refinancing unless rates collapse, but they can still recast, and most of them don't know it. Now let's talk about the catch, because there's always a catch. A mortgage recast lowers your payment, but it doesn't lower the total interest you'll pay over the life of the loan by much. You're still paying interest on the remaining balance for the full term. You're not shortening the loan. You're not paying it off early. You're just spreading the same debt over the same amount of time with a smaller required payment. If your goal is to pay the least amount of interest possible, you'd be better off making that lump sum payment and then continuing to pay the original higher monthly amount as extra principal. That way, you're paying off the loan years earlier and saving tens of thousands in interest. But here's the counterargument. Life is unpredictable. Having a lower required payment gives you options. If you lose your job, you're only on the hook for the lower payment. If you have an emergency, you have more cash flow. If you want to invest that extra money elsewhere, you can. A lower required payment is insurance. You can always choose to pay more, but you can't choose to pay less if your required payment is high. This is the philosophical divide. Some people optimize for paying off debt as fast as possible. Other people optimize for flexibility and liquidity. A recast is a flexibility tool. It's not a pay off the house early tool. There's no right answer. It depends on your situation. But the fact that most people don't even know they have the option means they can't make the choice at all. Here's another wrinkle. Some lenders limit how many times you can recast. Some allow one recast per loan. Some allow multiple. Some have waiting periods between recasts. The rules aren't standardized. Every lender has their own policy. That means if you're planning to recast, you need to ask about the rules up front. If you can only do it once, you want to make sure you're using it at the right time. If you recast with a $10,000 payment now, you can't recast again in 2 years when you get a bigger windfall. This is another reason the option stays hidden. It's not simple enough to advertise. The rules are lender-specific. The minimums vary. The fees vary. It's easier for banks to just not mention it and push refinancing instead, because refinancing has clear pricing and clear marketing and clear profit margins. The mortgage industry in America is built on a few assumptions. One of those assumptions is that you'll pay your mortgage the same way for 30 years. Same payment, same schedule, same auto draft on the first of the month. The system is designed for predictability. Lenders like predictability. Servicers like predictability. Investors who buy mortgage-backed securities like predictability. A recast disrupts that predictability just a little. It's not a radical disruption. You're still paying your loan. You're still making payments on time, but you're adjusting the terms in a way that benefits you instead of the lender. You're taking a chunk of equity that would have slowly built up over years and converting it into immediate monthly savings. The system allows it because it's not risky. You're paying down principal. You're reducing the lender's exposure. There's no downside for them except they can't charge you refinance fees. But the system doesn't promote it because there's no incentive to. The infrastructure exists, the math works, the legal framework is there, but the marketing isn't. And in a world where most people get their financial advice from whoever's trying to sell them something, the absence of marketing means the absence of awareness. That's not a conspiracy, it's just capitalism. If there's no money in explaining something to you, no one's going to explain it. Here's the last thing to understand. A mortgage recast is not magic. It's not a hack. It's not a secret loophole. It's a contract feature that's been sitting in your loan documents the whole time. You just didn't know to look for it. But now you do. If you've got a lump sum of cash, if you've got a conventional loan, if you want to lower your monthly payment without refinancing, if you want to keep your low interest rate, if you want more flexibility in your budget, call your lender. Ask if your loan is eligible for a recast. Ask what the minimum is. Ask what the fee is. Ask how long it takes. They might say no, but they might say yes. And if they say yes, you've just unlocked a tool that most people will go their entire lives without knowing exists. That's the mortgage recast, the option your lender won't advertise, the flexibility you didn't know you had, the $250 move that could save you hundreds of dollars a month for decades. The question isn't whether it's a good idea. The question is whether you're in a position to use it. And the only way to find out is to ask, because the system won't tell you. You have to ask the right question. And now you know what question to ask.